Let's just start with the mess that everyone seems to have made with the Iran situation that I think has driven crude all the way up and that it's driven crude all the way down. How much of a mess is this?
Oh, hugely, which is why we titled our piece, What a Mess, on Monday. I think, look, the reality is, and like exactly what Will is saying, it's impossible now to do fundamental analysis with any form of certainty because of what's going on with the US administration and their relationship with Saudi Arabia. To your point, what you were asking Will earlier, usually it's an upside risk, any issues with the Middle East. Why is this a downside risk? Because Trump told everybody that Iran was not going to get any waivers and exports from Iran was going to go to zero. Everybody planned for that. They were starting to buy crude from all other sources, which is precisely why Saudi exports in November was going to be at a record high. We've known this for a few months now that it's coming. And this data just confirms that. Suddenly, the administration turns around and hands out waivers, which, by the way, there is no official number because the White House doesn't have one. We've spoken to our contacts and we think it's about 1.3 to 1.5 million barrels per day. That's a huge U-turn. So, of course, now the net kind of imbalance or oversupply, quote unquote, is about that much, right? And that's what the OPEC guys need to take off the market. But it almost becomes impossible.
So, Amrita, I want to get to that with you. What is your base case for the next OPEC meeting? I think typically, if we didn't have a President Donald Trump, we'd be expecting OPEC to come back, peel back the production by quite a margin. I think for some people out there, they're not expecting a thing over the next month or so.
I absolutely agree, and we have very strong views on OPEC. Usually we have very good connections in the kingdom and other GCC countries. And I will say this, we don't have a very strong view. You simply cannot. Based on fundamentals, absolutely OPEC is pushing for a cut. They know what they need to take off the market to balance this market is about 1.4 million barrels per day. There are talks going on with Russia even next week. All of that's going to go on. And I think fundamentally they will drive towards a cut and a big cut. But how on earth would you or I know that MBS just doesn't call Fowler the day before or the night before and just say, no, you can't cut because of X, Y, Z? We cannot be certain of that.
That's a really good point. They're the supply fundamentals. Let's try and get our teeth into the demand. Andy Hall, legendary oil investor, saying the following, Amrita: demand has taken a downturn. We can assume that it may be because of a stronger dollar against EM currencies, or it may be finally the concerns regarding Trump's trade war beginning to impact the oil market. I want to really try and understand the demand picture here, Amrita. Is it real, imagined, or feared? Because when I look at crude demand in China, it still looks really strong. It looks solid. Do you see any demand issues in the data right now?
Very good point. Not here right now. Every data point that's coming in is still very good, except for Europe. But again, weather has played a big issue, right? In parts of Germany, the Rhine just isn't full, so barges can't flow and whatever else. However, I just got back from China, and the one thing I completely agree with Andy is this is about the future demand numbers, because everybody is very concerned about the trade war. So what we heard firsthand from companies is they are destocking because they fear the economy is going to slow very quickly. And again, oil markets tend to be forward-looking, and I think people are pricing in a sharp slowdown come Q1. May not materialize, but that's the fear.
Amrita, final question for you. It comes from a Bloomberg viewer, and they write to me and they say, how low will oil prices affect US domestic production? Will it stop new oil drilling? What will happen in places like the Permian with crude in the 50s?
I think that's the most interesting question, because I don't think Trump has realized that actually high oil prices benefits the U.S. more now than low oil prices because of the amount they produce. At current prices, Bakken producers in North Dakota are at real risk. Even in the Permian, prices are now below $50, which is below their break-evens or within their break-evens. Production growth will absolutely slow. And if this persists for longer, of course it needs to persist for a while, you're going to start getting unemployment rates going up again, and that's going to have a knock-on impact on these regional economies. So again, something to massively watch out for, because suddenly the tune from the White House could turn.